All right, guys. So this is pretty much what my screen looked like. We're going over a recap first. This is pretty much what my screen looks like on a day-to-day basis. Pretty much, I like to use kind of like three charts, 2 to 3 charts, maybe six. Sometimes it just depends on how the market has been pushing. But honestly, looking at a couple charts, maybe two stocks and maybe some type of index or whatever. That's normally how I like to trade. So and as you can see, when it goes to the actual stock that I'm looking at, so hold on, let's put this was coin. So when it comes to the actual stock that I'm looking at, what I do is I have the stock that I'm looking at. Normally it depends on the day. I'm about to this literally does not matter where you put the stock at on your charts. It doesn't matter. I'm just showing you like what I look at, and normally keep an index here or just whatever day I want to put it, wherever I want to put it. I don't know. So that's not important right now. But so a lot of people have been asking me, because they heard that one of the accounts that I started a $7,000 account with Gary recently. And for the entry into my little trading firm that I'm starting or whatever. And we took one of the accounts from $7,000 to 106,000, and then we withdrew it, and then we brought it back to 50K, and then now it's sitting at almost 90K. And a lot of people were kind of confused on like, how am I doing that? What is a setup? What is a plus setup? And just kind of go from there. So for me, I'm not gonna lie to you guys, there's different criterias when it comes to A plus setups. I'm gonna just show you what I consider an A plus setup, and you can kind of just take it how you want it. Let me delete that. And let's just get down to two charts first. So let's start with Amazon, right? So Amazon was obviously, I traded Amazon multiple times today, and I'm about to show you how I was able to do it. Sorry. Let's go here. We can actually delete all of this. No, we don't. We can keep it. And then NQ. So what I like to do, and I need to be a little more disciplined with this. I need to, be more disciplined with using the indexes, like the futures. I need to be more disciplined using that while I'm trading. Sometimes I will stop using them. What I mean by the futures, I mean /NQ. So if you look right here, /NQ, that's for the NASDAQ, and then /ES is for S&P 500. So using those or having them while you're trading. We're not saying trade it. We're just saying using that. So, like if the NASDAQ is going down, then if you're in Amazon, then most likely Amazon is going down, right? And using that gives you that extra confirmation. What I consider an A plus setup, if you want to put this in your notes, an A plus setup is when the NASDAQ or when your index is pretty much doing the same thing as the stock. So if you see, for example, let me show you exactly what I mean by that. So I looked at Amazon as an A plus setup, right? So first, let's go here. Let me add my EMAs. And I'm going to tell you my EMAs or whatever in a minute, but EMAs. So, okay. All right. So okay, so do everybody know what this pattern is right here? Right here on NASDAQ. If you know what it is, say what it is. Okay, above flag. All right, good. So at the time, I was actually looking at Amazon, right? And I was deciding, were we going to break out or not, right? We were at this zone, this demand zone, holding this zone right here. And I'm going to teach you demand zones in a minute, but we were holding this zone right here. And as you can see, we looked like we were flagging, right? We were holding our EMA. We look like we were flagging. Amazon is a demand zone. So to figure out if I want to take this trade or whatever, I now have that as my confirmation as well. The more confirmation I have, the more likely it is. So I consider this an A plus setup because I have those multiple confirmations. So I had NASDAQ look like it was flagging, and then Amazon was trying to break out of this trend line, make this trend line break, right? We started a downtrend, and we couldn't really break it. We couldn't create lower lows or whatever. So then that's what made me took calls, right, to catch this nice move up, right? And what gave me that confirmation was using the NASDAQ, using their charts to kind of like help me gauge where we're going, right? Now, when I took puts earlier today, I took puts off of, so let's go here. I took puts, you've seen I took puts today. So as you can see, we had an uptrend, right? Let's go here. As you can see, you want to trade with the trend, right? So it was in a clear uptrend, right? So as we were getting into this uptrend, we pulled back. And then as you can see, I was assuming that the trend was now broken because we couldn't create another higher high, right? When we pulled back, we were supposed to create a higher high, but we didn't, right? So I took puts right here around here. Hold on. I'm just showing y'all like the little scalp push that I did. I took puts right here. Can anybody tell me what this is? What is this area? What is this? Nope. Well, it is resistance, but what is it? Nope, not supply. Nope, nope, nope. There we go. So this is our first lower high, right? So that's pretty much what happened. So we took the trade, we took puts, right? Remember what I told you guys. We take puts at lower highs and we sell at lower lows, right? We never take puts at lower lows, right? Because you're trying to say that's the next thing you want to trade the trend, guys. So do I have to go over the trend with you guys one more time before to make it make sense? Do you want me to go over the trend real quick? All right, let me go over the trend for you guys real quick. So that maybe that'll help you guys. So whenever you're looking at I'm just making random levels right now. Just making random levels over here to kind of get you guys to understand what I mean by that. So let's start off the trend. Let's identify the trend first, right? So this is, can anybody tell me what this is? What I'm making right now? This is an uptrend, right? Correct. Okay, so now this is an uptrend. So where do we buy calls on the uptrend, right? Can anybody tell me where do we buy calls on the uptrend at? Higher lows, not lower highs. Remember, we're in the uptrend, right? We're at higher lows, right? So what that means is whenever you're buying a stock or buying calls and want the price to go up, you want to buy it at these higher lows. And if you don't know what higher lows is, the reason why, so this high is lower, this high is lower, this high is lower. So whenever you're looking at an uptrend, these are points that you want to buy it at. The problem with a lot of traders that start trading when they first start off, they don't understand trends. So what happens is and let me know if this happened to you. I'm gonna keep bringing this up every time I mention. How many of you guys have actually bought a stock, it pulled back, you sold for a loss just to see it continue to go your way? How many of you guys actually did that or still do it, right? How many of you guys have actually bought a stock just to see it go your way after it and shook you out? And this is what's happening most of the time. You're buying on that impulsive move, right? You want to have an impulse correction, impulse correction, impulse correction, impulse correction, impulse correction, right? And that is why we tell people, like, don't chase those moves, right? If you see a stock running up and you want to get an entry, just wait for it to pull back. And I have people all the time be like, Jay, well, what if it don't pull back? Then okay, you don't take the trade, right? You want to buy at higher lows when you're taking calls, right? You have not once ever seen me buy a stock at like right here. This is exactly a prime example, right? So look, Amazon just ran up. Did Amazon, once it started this uptrend, did Amazon actually ever pull back? Like, did it give me a higher low? Right? Can anybody look? Did Amazon right here give me a higher low? Right. It never gave me a higher low. So if I wasn't already in this trade, it was no reason for me to try to enter this trade no more. I had to wait for a pullback. It never gave me that pullback. So if you wasn't in this trade, then you just missed out on it, right? You don't chase impulsive moves, right? You wait for it to pull back and then you buy it, right? So when we're looking at puts, it's pretty much the same thing, guys. So let's say we start the downtrend, right? So let me go there. We have an impulsive move down. boom, correction, impulse, correction, impulse, correction, impulse, correction, impulse, right? So when we're taking puts, right, we only take puts at lower highs, right? We're only taking puts at lower highs and we're selling at lower lows. The problem with a lot of traders is they like, oh man, you know, Tesla just made a move down and is at this level. I think it's about to break. So I'm gonna just take puts here. Then you see what happens. You take puts here, it reverses, it shake you out. Then you mad, you say the market is a scam, and then you come back, Tesla already down at your next level, and you're trying to figure out what happened. That was a shakeout, that's BS or whatever. No, you just bought at a lower low, right? The next move after a lower low is a lower high. So it's the same way, right? Now, people ask me all the time, how do you know? So if we're in the downtrend, I'm gonna let y'all answer this. How do you know that the downtrend is now it's not like the downtrend is starting to reverse, right? Can anybody tell me when a downtrend is reversing? Like, can anybody give me an idea on how do you know that a downtrend is reversing? Ignore the EMAs. No, how do you know that a downtrend is stopping? Right, there we go. Good job. Oh, that's juice. So that's cheating. That's cheating. That's cheating. But if it refuses to make another lower low, right? So let's look at Amazon. This is how I knew that I wanted to stop taking Amazon puts, right? This is how I knew right here. Let's go look at it. So we started this downtrend, right? Let's draw it out. So we have an impulsive move down, boom, lower high. And what happened? What happened? We did not make another lower low, right? We did not. We made a lower high, but then did we break below this lower low? Did we break below this lower low? Let me know, y'all. Did we break below this lower low? No. So that is telling me that, okay, it's time to stop trying to run Amazon puts because we did not break a lower low. Most of the time, what happens is if we can't break a lower low, what does it form? If we can't break a lower low, what does it form? If it just makes a low, a double bottom, good job. So we formed a double bottom, and that's what happened, right? It ain't gonna always be pretty, but that's how it works. What about a uptrend? What stops the uptrend from going up, guys? When it refuses to do what? Make a higher high. So normally, what do that create? If it can't make a higher high, what do that creates? A double top. There we go. So when you're looking in terms like that, that's how you know, guys, you have to understand trend, right? Now I'm finna draw something real quickly. Is this, let me know, I want y'all to identify what type of trend this is. What kind of trend is this? What is this? Chop, right? How do we trade this? How do we trade chop, guys? How do we trade this trend? You don't, right? But that's the problem with a lot of traders, right? They have to force this. They have to force this, right? They want to force this kind of market. They want to force this. Somebody talking about some shares. Yeah, that's probably the best way to do it. Just go ahead and copy some shares and go about your day. But yeah, like, and I'm a victim of this. I'm not on here to like bash nobody or nothing. I definitely get caught in this sometimes. But as you can see, it's not worth it because what happened? What happened, guys? What happened? If we just waited for a trending market like we have for the last 2 days, look at this, right? We didn't get no chop, right? We was in a clear uptrend. Hold on, let me see. Let me show y'all. This is an uptrend, right? We're in an uptrend now. So if we just waited for this, can y'all agree that the last 2 days been pretty easy to trade? Like, let me know if it has the last 2 days of trading, it has Thursday and Friday. Has it been kind of easy for you to trade? Have you made money? If you're saying yes, that's because guess what you did? You traded in a trending market, right? The market was going in one direction, right? And if you were red, that's probably because you still had this mindset thinking it was this, but it wasn't, right? And that ain't nothing wrong with that. If that's what happened, that's fine. You will get better with time. Trading is the experience game, guys. The more experience you have, the better you will be, right? And you have to just learn, right? That's why I'm sitting here. I'm teaching you guys what is the difference, right? This is chop. This is chop right here. You want to avoid this. You want to wait, right? You don't, when you see this and you can't identify a trend, you just want to say, hey, I'm gonna just chill out. I'm gonna just let this do what it do, right? Eventually the market will get out of this phase. Normally when it's doing this phase, it's like a consolidation or whatever, normally setting up for a big move, right? And that is what we waited on. That's literally what we've been waiting on, right? Right here. So this right here, this is a downtrend, right? This is a downtrend. And then we tried to make this new uptrend, right? So just for your homework this weekend, guys, just get used to like making trends and just identifying trends and just get better with that. Then when you get better at that, you can be able to, identify things, right? Like all of this wasn't really a trend, guys. This was kind of like just trading sideways in this area right here. It's kind of trading sideways. Then we started getting like some little trend going, look crazy, but the market kind of been all over the place, honestly. So my mind was messed up, but it was moving in one direction. Yeah, people were overcomplicating the market, right? Because you're used to trading in this, right? So when the market actually gives you, let me come down to one screen so I can kind of show you a little better. When the market tries to give you, okay, here we go, we're going in one direction, your mind is still in that chop. That's why a lot of people were still trying to buy puts. They were like, oh, the market going up, it got to come down. And people started buying puts, and that's what happened. They were getting chopped out. So but you have to understand the market will come back to these type of trending things, right? So now when we're looking at, let's analyze, and I'm using Amazon for example, let's analyze what's next, right? So we had, when we identifying the trend, right? Boom, what's identified, pull back and post to move up, pull back and post to move up, pull back and post to move up. So now people are like, well, Jay, how do you know how high it's going to go? You don't know, right? We're waiting for the pullback, right? And now, can anybody tell me where, where Amazon, where can we take Amazon put stances in this uptrend, right? Can anybody tell me that? When can we take it? When can we start taking Amazon puts again? I'm saying if it were, when do we start? Good, below the 9 EMA, that is a good idea. But a break of the lower high. So right here, this is the last lower high that we put in. So this is the only time where the uptrend would now be invalidated. So that will be here at this level, which is under 2250 basically. So under 2250 is when Amazon puts are back on the table, right? So until then, it's a uptrend. So you're only looking for calls, right? Not saying that just because it's an uptrend, you just buy it anytime, because I think people get that confused as well. They're like, well, since it's in an uptrend, I could just buy it anytime and it's gonna go up. Come on now, y'all know how these this market been, right? Y'all know how these pullbacks been, right? You probably want to wait for a better entry when it comes to that, right? You want to buy at these lower lows, at these higher lows, right? Get used to that, guys. Get used to buying at higher lows, right? It makes the trading so much easier. And I'm about to give y'all some real game right here. Look, check this out. If you have a problem with price targets, guys, I'm about to help you out right here. If you have a problem with price targets, if you get into a habit of buying at, higher lows, your price target is always going to be that higher high point. You know what I mean? Because even if, let's say that you buy right here, right? You buy Amazon right here at 2220, right? At 2200. And then your price target is at 2232, at 2232. So we know that that was the previous high. So when you're buying in a lower high, we know that that's our next target. Now, let's say that they don't break above, it's going to create what? A double top, right? So it's going to create that double top, but at the same time, you didn't already had a clear profit taking target, and you're most likely taking profits here anyway. If it does all of that above, then there you go, boom, you made even more money. But normally, if we're buying here, our price target is already set for us, right? That is exactly what I did on Amazon today. This is exactly what I did. Look, I'm about to show you. Exactly what I did. So let's clear all that. So let's go back to the 15 minute. I'm about to show you exactly how this played out, right? So when we come here, right, I'm using those previous highs as price targets. If you go back to my chart, and I'm gonna show you, I'm gonna give y'all like some little game or whatever on how to make better price targets. But look, so if we think this is a double bottom, right? Boom, boom. Can anybody tell me my first price target if I'm buying in this area right here? What would be my very first price target? Right. Exactly. That neckline, that 2275 area, right? Exactly. Exactly. That would exactly this area right here, right? And that's exactly what my level was. If you go back to my charts that I posted, that's exactly what it was. What would be my next one? What would be my next one? I'm gonna answer your questions in a minute. The top of the pattern. There you go. So the top of this area right here normally acts as a magnet, guys. It normally acts as a magnet. It's going to go to those highs. That's exactly what I did. I do this all the time, literally. Let me show you an example of coin, right? And I do this with anything like chart patterns, bull flags, anything I do. Let me show you another example of coin, right? This was yesterday. Coin did kind of the same thing today, but it wasn't as pretty. But this is the trade I took on
I
coin.
didn't get that. Could you try again?
Okay, Siri. All right. Okay, so let me show you the trade that I took on coin yesterday. All right, so right here, what pattern is this? A bull flag, right? So my target was what? It could have been a little higher. I'll be more transparent. It could have definitely been a little higher. It could have actually been the actual high. But this level was already here before I even plotted it. So, but it definitely could have been this high instead. As you can see, it still went exactly there on the money, actually. But I had it right here because it was already a level. But actually, this level would have made more sense right here because as you can see, it was resistance that a couple of days ago was that resistance as well. But as you can see, we took the bull flag, right? And then what do we do? It smacked that level on the money. And then whatever it did above that, that's fine. But our target was there. The problem is you guys don't like taking profits at your targets, right? You literally don't like taking profits at your targets. And that's so weird to me, right? I don't know why people don't like that. Like, if you say that the stock is going somewhere, when it goes there, why are you hesitating to take profits? Because you think it's going to run more? You think it's going to run more? Yeah, it could, but get into a habit of taking your profits at your targets, right? Now, really quickly while we're right here, let's go over runners real quick because I think people get that confused as well. So let me be completely honest with you guys when it comes to runners, right? When it comes to runners, and I have to get on one of my mentees about this, right? When it comes to runners, guys, if you're a person that when you look at a certain profit and you want to like, and you put that, like somehow you wire your mind that number that I seen, even though I didn't sell yet, that number that I just seen in my P&L, that's my profit. So what happens is you guys ended up, if you got 10 contracts, you up $1,000 and you telling yourself that you want that $1,000, but you're going to leave a runner and then you let those runners pull back. And now that $1,000 is gone and you're going to try to hold and you turn into a losing trade. The whole reason why I'm saying this is when you're leaving runners, guys, you have to leave runners as if like, I'm leaving it like to a point where I don't care if the runners hit or not. That's what we talking about when we say leave runners. If you're leaving runners that you care about, then you're doing it wrong, right? If you're leaving a runner, that means that I'm okay with the profit that I already locked in. Whatever else after this profit, I don't really care about. Like, obviously, we wanted to keep running and keep producing us more money, but you have to have a mindset to where it's like, if I leave this money right here in this play and I don't take profits right here, I don't care if these runners go to zero. Now, I'm going to be honest. I'm going to show you how to manage runners. You don't want them to go to zero, but I think a lot of people don't know how to like leave runners or chase profit. First of all, number one, if you have a small account, the first thing you should be doing is you should be I know people say you got a small account, you want to take profit. Yes, you want to take profit, but you also want to start utilizing stop losses to be able to chase those bigger profits. The reason why is because you got a smaller account. You need those extra gains to push you up, right? You need those extra gains. So that's where stop losses are important. That's why we're going to be utilizing them a lot in the chat because you guys have to start using stop losses and also get used to setting stop losses at break even. If you don't know what I mean by that is, let's say that you bought Apple for $100, then you want to, like, as that trade start going in profit or you have runners left, you want to set your runners at $100. So if it comes back below $100, it's going to sell you out, right? So you're not taking an actual huge loss on your runners, right? And I think that's what people need to understand, or also leaving stops in profit, right? So that means, let's say that we were up $400 on coin. At the time right here, coin, the contract price was $150, right? So what you would do is, let's say that you it's at $150 here, and then it runs up. Now it's at 170 or whatever. What you're going to do is, since you took it up here, you're already in profit. You're going to set that stop loss for $150. So as long as it keep running, if it comes back down, you're out, right? Can you set a stop loss before you buy a contract, because some stocks move so fast? I actually, to be honest, I think you can. I have never did it that way. Just because I try to let the contract move a little bit. Just so I've never tried it, but I do believe that that's possible. I would definitely look into that for you and let you guys know. But that is what I want you guys to understand. Like, if you're going to leave runners, guys, it has to be like in a mindset to where it's like, oh, if I leave this money on the table, I don't care what it does from that point, right? I took most of my money out already. I keep telling people, you're not going to catch the whole entire move. You're not. You're not going to catch the whole entire move. I don't know why people think that though. Like, they legit think that they're going to catch the whole entire move. You're not going to catch the whole entire move. Actually, quick transparency right here. I sold coin around a little bit before it got here, right? For about 30, maybe 46%, I believe. And then coin actually went up 100%, right? I left money on the table, right? I left money on the table, but understand, that is part of the game. You are trading against, hedge funds. You're trading against people with tons of money, guys. When we trading against this smart money and the big dogs, right? Our job isn't to beat them. And I don't think people understand that. Your job as a retail trader, you're a retail trader, guys. Your job as a retail trader is not to try to beat these hedge funds with billions and billions and billions of dollars, right? That's not your job. Your job is to try to find the moves that they're doing and catch a little piece of it, right? That is your job as a retail trader. You're trying to catch a little piece of the bone, right? That's all you're trying to do. You're not trying to go beat no whole hedge fund. I don't know what people got this mindset that they about to go beat a whole hedge fund. They're not tripping about no $50 million loss. They gonna make that back tomorrow, right? But you got a $10,000 account. You trying to compete against them. You lose your 10,000. You gonna have to go to work and for a little minute and save that back up, right? So I don't know how people want to compete with them. You competing with the wrong crowd, right? Your job is to get in, make this money, and go about your day. That is your job as a retail trader, right? If you want to start beating hedge funds, go ahead and step into that hedge fund lifestyle and then do it that way. But as far as a retail trader, your job, get in, get your money, and go about your day. So now I'm gonna start asking some questions really quickly. Stop losses based on share price. No, I'm doing stop losses based off of contract price. Now there is like a I know TOS has, it's like hella complicated. I'm not gonna lie, it's like extremely complicated, that where you can actually set it for a share price, but we're talking about contract prices. So like if I buy a contract at $640, my stop loss is at $600, right? It's a $40 loss per contract. So it's always important to be paying attention to your contract prices at these levels or whatever it is. Like, okay, right here, coin is at 150. So, okay, I know if coin breaks below this level, the contract is at 150. I want to have my stop loss at 150. So keep that in mind. Also, what I did was I don't like to put my stop losses at whole numbers, if that makes sense. Just because when they do stop loss hunting, that is a real thing. They do stop loss hunting is a real thing. Normally they would come to those whole numbers. So like maybe like instead of setting my stop loss for 0.50, like whole number, I set it like 0.48 or something like that. Kind of so I don't get stopped out as easily. But guys, like with trading, you have to understand when it comes to a profitable trading strategy, guys, losses are in that, right? Losses are in that. You're going to take losses. They're going to be time. Actually, quick transparency. I got shooken out of coin first, right? I actually took coin. I think when we were breaking, when I took coin right here when it was holding 21 EMA. Stop loss is kind of below. If we break below that 21 EMA, as you can see, what did we do? We wicked hella low, right? I got stopped out, and then as you can see, it was still valid. It did not close below that level. It did not be closed below the flag. So the play was still valid, and I entered back again and rolled it back up and made my money, right? You're going to get stopped out. That's why it's important not to use all your buying power, especially for you guys with small accounts. Don't use all your buying power on one trade, right? One thing that I told my mentees the other day, one of the ways that I used to grow my account is, especially with using a cash account. Well, I ain't gonna lie, I kind of grew. See, the market was different from what it is now. Like quick transparency. I'm not gonna lie, I pretty much swing my way to success. Not even gonna lie to you guys. Then once my account got over 25,000, that's when I introduced to scalping or whatever. Because at first, I didn't know much about cash accounts, so it was kind of just like taking A+ setups and just swinging your way to success. So buying something like literally swing trading used to be a real swing trading used to be where it was at. Right now, it ain't all fun or everything. You might get lucky sometimes, but back then, swing trading definitely was, the way to go, right? You swing something and you wake up to your portfolio is tripled or doubled, right? So right now we're not in that market. So you have to get used to day trading and scalping. All right, so let me ask some more questions. Too early that you setting it based off of share price and price targets or just an alert. Oh, so no, you can't set it for an actual price. In Forex, you can. Stocks are a little different. It's hard to set it at a share price. But what we do now is I think you can do like a limit, like if you were actually trading shares, but we're trading options, we're trading the contracts. So it's like it don't really work that kind of way. You know what I mean? I'm pretty sure it's a way you can do it on TOS, but I think it's a lot more advanced. But understand we're trading options contracts. So like, saying to stop us out of the share price, you have to understand it's a option contract. So it's not like shares where you can get stopped out of the actual price. So it'd be options contract prices. But I just set alerts, right? I just set alerts on my phone for the actual share price because I know like, oh, well, if a stock is at this level, right? I don't want it to fall below this level, right? So if I'm in here, I don't want if I'm got my runners, I don't want coin to fall back below 68.50. So I set my alerts on TOS or sometimes Yahoo Finance, or that's pretty much all I use. I don't know what you guys use, but that's what I use. Oh, I would never even know. I didn't even know Robinhood had alerts. So I didn't even know Robinhood had alerts. So I wouldn't even use it on Robinhood. But Yahoo Finance is pretty good. Also, what I do is, since I know a lot of you guys are in trading communities, what I normally do is I kind of like delete not delete it, but I mute everything else if I have alerts up. Because like I'm not gonna lie, like if you have so many like notifications coming to your phone, them alerts are not about to bug you. Like it's literally gonna send you one alert and say the stock price is here. And then you didn't got probably 10, 20 different messages from Discord and you missed the alert. So just keep that in mind. Definitely want to mute those distractions if you're in a trade that you're using alerts for, if you're not actively on the chart. So keep that in mind as well. Also, with you guys that have jobs, using stop losses are important, right? Like one of the reasons why I like using stop losses is, and I'm mad because I haven't implemented stop losses to you guys in a minute. Just because we just haven't been, telling you guys like, hey, you need to be using stop losses. But if you're not using it, I don't know how you still survive in trading right now, because the emotions and all that just get into it. Like using the stop loss is literally the best way to just eliminate that factor. If you have a problem with holding losers and just holding losing trades, or just having trouble cutting it, like any of that, just use a stop loss and just call it a day, right? Just use it, call it a day, and move about your day, right? The best way to do it. You save capital that way. Like this is the easiest thing. So yeah, so let's get into let's see. Okay. All right, so pretty much I'm pretty sure you guys understood the Amazon trade. That was pretty easy trade. me see, coin. Coin was pretty much the same thing right here. Coin was pretty much the same thing, guys. What did it do? We started this higher low, so we came back down, tested it. We cannot create another lower low. So that is indicating that that downtrend is not as strong as we thought it was. So now if it breaks back, you know, take the calls, right? It's not that hard. Keep trading simple. I didn't say keep it easy, just keep it simple. What's another example? Oh, snow. Somebody asked me about snow, right? So this is the trade that we took. What was the trade we took yesterday on snow? What was it? Here it was right there. So yeah, pretty much now, I'm not gonna lie, you probably gonna want to like really pay attention. Because snow was like a more complicated trade. There's two ways to take this trade. This trade did go 600%. This trade definitely was a harder trade. This wasn't an easier one. But if you understand to buy at higher highs and higher lows, or by the breakouts of higher highs, then you understand that. So what I want you to do is I want you to look at what I'm drawing on the right first to kind of understand this trade, right? Right? So remember, if we're saying buy it at higher lows, there we go. We got our higher low. So now when we implement this right here, then we have the actual trade that we want, right? So let's draw it. So we come here, you know, I kind of just pierce through the wicks. You don't have to, but I normally don't really care. I just kind of just pierce through the wicks or whatever. So we can start finding a high. So now we drawing that same thing. We have that impulsive move up, come down, and the same thing. There you go, right? So that's pretty much the kind of trade that I took. Now you have two ways to take it, right? You can either buy at that higher low, or you can buy the breakout. If you're a breakout trader, you buy the breakout. On snow, I actually bought the breakout. I don't trade breakouts as much. I normally like to buy the dip, but as you can tell, you know, we didn't have a clear trend started yet. So it wasn't easy to actually find a dip. So what I did was I bought the breakout instead. So as we broke above, boom, I bought the breakout, and then I just let it run to my targets, right? Did that kind of make, I think I explained this better than what I did last night in class. I think I explained that way easier than what I did in class yesterday. Did this trade make sense? I just literally bought the breakout. Cool, cool. And I just let it run to my targets, right? And what did it do? It held above the 9 EMA really quickly. If a stock is above the 9 EMA, what did that mean? Uptrend, what else? It's bullish, right? If a stock below the 9 EMA, what did that mean? It's bearish, right? So keep it simple, guys. Keep it simple. So now let's look at the trade that I was trying to do today on because people was asking me, Jay, why did I take that trade? Okay, so the trade that I tried to take today wasn't the best. At the time, NASDAQ was looking pretty weak. So my whole thought process was that we were going to, I'm going to show you real quick. So boom. So this is my thought process on this trade. Where is it at? Here it is. Yeah, here it is. Here it is. Here it is. So this is kind of my fault. I didn't analyze the whole entire chart. What I should have did was we had a clear double bottom, right? And I actually tried to short. I tried to short a higher low. And as you can see, I traded against the trend and I got messed up. No, I mean, I didn't really get messed up. I lost like $80 on it. But still, it's still like a loss is a loss. And it could have been avoided, but I wasn't paying attention. I literally woke up and I think the problem was I had all of this. I had like all of this. It's also, it's always important to clear your charts out. Like I think in the morning when I woke up, I had like everything all bunched up. So what happened was my charts were zoomed in like this. Let me show y'all. This is exactly how I lost this trade. This is a human error, right? My chart, yeah, literally, I woke up just like this, y'all. I'm like so serious right now because I woke up late today. So I woke up like this and my charts was like this. I literally did not even look at the overall picture. I literally was just like, okay. When I had NASDAQ pulled up, because I was going to take calls, right? I was going to take calls here. I was literally going to take calls, right? I should have took calls, but I even had it on my Robinhood watch list to take calls. But what happened was NASDAQ was looking weak, right? And we started getting these huge wicks right here at the top. So I'm thinking that, remind you, I'm not looking at the overall picture, guys. I literally never looked at it. So I'm looking at NASDAQ. So at the time, NASDAQ was like showing some, it was coming down, but it didn't quite break the 9 EMA. It just kind of held the 9 EMA. So I started seeing these wicks. What do these wicks mean, guys? What do these wicks mean? When you start seeing wicks, what is that at the top of a candle? What is that? What do the wicks mean? Not reversal. Selling pressure, right? So we were having some nice selling pressure, right? And it happens. So we were getting some seller pressure. The sellers was pretty strong. And well, not really that strong. The volume was cool. I'm looking at the tape, which was one of the things, and I'm gonna teach you guys tape eventually. Right now, the tape just been the market hasn't really had no volume really, so the tape kind of just been dead. Like if you traded Amazon today and you were trying to use tape, you were just like, it ain't nothing there. So overall, we had these selling pressure. So what I tried to do was I tried to take puts right here, but as you can see, whatever happens, what did I tell you guys? What do I tell you guys all the time? What not to do? What not to do, guys? What I tell you all the time? What not to do? Go against the trend. So that's exactly what I did. I went against the trend and I paid the price, right? So where should I have took puts here? I want to see if somebody get this right. Where should I have took puts on snow? It wasn't. It was never no. It's no downtrend, so it was never a lower high. Right. Good job. It was a trick question. You shouldn't have took puts at all, right? Unless it would have fell below the actual double bottom, right? So unless it would have fell below this 120, 123, you should have took puts, right? Because guess what? Everything else is in an uptrend. I mean, it ain't really give you no lower, no higher low, no nothing. So it's kind of just like this wasn't even a setup for puts in the first place. So this should never been puts in the first place. So took a small loss on it. Luckily, we were able to get out, but I was gonna take calls, but this was a harder trade. This is one of those trades where it wasn't quite an A+ setup, so it shouldn't even have been traded, right? It was an A+ setup here. This is the area that we should have took snow, but I was obviously asleep, so I missed this whole entire move. But like this is the area, right? This is the area that we should have took snow at, right? Because it was a double bottom, right? We had an actual chart pattern. We had the actual confluence, right? That we didn't. Yep, I clear my charts. Yeah, me personally, I clear my charts every morning and refresh them and for me, people are like, oh, that's probably doing too much work. But for me, more chart time. For me, it makes me a better trader. Doing that. That was a clear double bottom. I'm mad as hell we missed that. I was asleep. My bad, y'all. This Forex stuff be having me up to 5 a.m. Okay, so we're done with that part. So let's go. Let me start the recording. So that's my little recap real quick. Let me start the recording and let's go over supply and demand real quick, and then I'm gonna let you guys go.